All right, but we're doing quite well today. The market's at the high point of the day, so it's looking good. Good way to start a Monday.
Absolutely, and all thanks to that very, very weak U.S. jobs print that we got on Friday. But now, without wasting any more time, let's quickly introduce our guests on the show. We've got Kunal Botra of LK Securities, who's going to be answering all of your stock questions, and Hemant Rustagi of Wiseinvest Advisors is our personal finance expert on the show. Gentlemen, thank you so much for joining in. Let's straight away get to our first question. G. Vanisri is calling in from Visakhapatnam with, I think, a personal finance question. Sir, good afternoon.
Yeah, good afternoon, sir and madam.
Yes, ma'am. What's your question?
Yeah, actually, I want some advice on a selection of mutual fund schemes for long-term investment. Say the time horizon is around 15 years. Actually, I'm already invested into SBI Blue Chip and Franklin India High Growth companies, around 2,000 each. I would like to invest further another 10,000 per month, and I'm willing to take risk because I already have a stable investment on Provident Fund. So can you suggest some schemes for that?
And you're looking at least 15 years in terms of investment, right?
Yeah, I'm looking for 15 years for the retirement funds. Yeah.
All right, ma'am, that's a nice long time horizon that you have, so let's straight away ask our expert. Hemant, as you heard her, she's already got certain debt investments in place. She's got a Provident Fund also in place, and therefore she's saying now she's willing to take some risk with equity. What are the funds that you think would be suitable?
Well, I think there are two important things. One is the time horizon. She wants to invest for a period of 15 years. So clearly when you're investing for a time horizon like this, you need to invest in an asset class where you can try and beat inflation. The second important thing is that she wants to invest on a monthly basis, which means that, you know, it'll have some kind of discipline in the investment approach. So looking at these two factors, clearly my recommendation would be that she should invest through SIP in a well-diversified equity fund. Couple of things you need to remember while doing so. One is that, you know, whenever you're investing through SIP, invest in more than one fund. Invest on different dates during the month so that whatever volatility that happens during the month, you can take advantage of that. And also have a right balance, you know, of exposure to different segments like large cap, mid cap and small cap. You know, she already has exposure to two equity funds. Both these funds are doing well, and I think she can continue. In fact, I would recommend that she can increase, you know, amount in those two funds. The third fund, I would recommend maybe she can look at Kotak Select Focus, which again is predominantly a large cap fund, but also has exposure around 35 to 40% in equity. So a combination of these three, as I mentioned, on three different dates during the month, I think will be ideal for a time horizon of 15 years.
All right, then. So that's some valid advice that's coming in. The Nifty, by the way, has moved even higher. Now we're within 5 points of hitting that 8,100 mark. HDFC putting on more weight, and that's what's really dragging the Nifty higher. While from the broader markets, something like an Apollo Tyres is doing quite well. Pull up HDFC, you'll see that's moved to the high point of the day. And Apollo Tyres as well has suddenly started doing well. It's holding with a gain of around 5.5%. as we speak. But our next caller is already...
Welcome back. You're watching Your Stocks. What a powerful rally it's turning out to be, not just on the Dalal Street, but around the world. Right now, we're 2% higher, very close to the 8,100 mark on the Nifty. And it has its genesis in what's happening in global markets. So it's perhaps pertinent to look at Europe right now. Almost a 2.5% to 3% up move on several of those core indices. The CAC in particular very strong. They're almost a 3% rally underway, and much of that percolating down to our market action. Banks leading the charge here, of course. Bank Nifty up 2.5%. But on that note, let's get to some questions. We have Sashidhar calling in from Bangalore with a personal finance question. Sashidhar, thank you so much for joining in. How can we help you?
Yeah, good afternoon. I would like to know the investment in a SIP. A monthly investment of 5,000, span of 5 years.
Okay, you want to do an SIP of 5,000 rupees for 5 years. If I could just ask you, have you invested in mutual funds, equity funds before? Do you have equity exposure, or would this be a first time?
This is my first time.
Okay, fair enough. Why just a 5-year time horizon, not a longer term time frame?
5 years because of my son's education.
Okay. All right, fair enough. So let's ask our expert. Hemant, so we have a gentleman here, first time getting into equities through the mutual fund route. What would you advise him?
Well, I think considering the fact that time horizon is 5 years, and he being the first time investor, and the fact that the money has to be invested for a very important purpose like child education, I think he should not be investing the entire money into equity fund. But the fact is, because even though he'll be investing through SIP for 5 years, his average holding period is going to be around 2.5 years. So my recommendation would be that he should be investing in a balanced kind of portfolio. Now, there are two ways of doing it. One is he can straight away invest in entire money in the balanced portfolio. The balanced fund generally invests around 70-75% in equity, the rest in debt. So therefore, to make sure that he invests around 50% in debt and 50% in equity, my recommendation is he should look at a combination of two funds. One is a pure balanced fund like Tata Balanced Fund, and the second could be a hybrid fund which invests in a combination of equity, arbitrage, and debt, where he can look at ICICI Balanced Advantage Fund. The advantage of this is that even though he'll be investing only 50% in equity, his return will be still tax efficient. Any gains that he makes after 1 year will be all tax free. So a combination of these two funds for 5 years, I think, would be ideal for him.
All right, then. So that's some advice that's coming in there. But let's get to our next caller who's here as well. Hemant, what's your take on this? I mean, he's going to be investing in the stock market. Do you suggest that he goes via the SIP route? If yes, how should he break that 6,000 rupees up?
Well, I think there are two ways of investing in equity market. One is obviously you can take direct exposure by investing in stocks directly. The second is investing through SIP and mutual fund. For someone, I think, if he's a first-time investor, I think if he's not very sure about which stocks to buy and when to sell, and also, it is slightly difficult to work out SIP in investing directly in stocks. Maybe my advice would be that if he has a time horizon on his hand, then he can invest in well-diversified equity fund. We talked about a couple of good, good quality equity funds like Franklin India, Prima Plus, and Kotak Select Focus. He can begin with those two and increase the amount as he becomes more comfortable with equity as an asset class.
All right, on that note, let's hit a very quick break. We'll come back shortly with some more questions and perhaps even the briefing of the German Chancellor and the Indian Prime Minister will kickstart then.
Cnbc TV 18, celebrating 15 years of leadership.